Hello everyone, welcome back to EduTap and welcome to Finance Current Affairs session. In today's session, we are going to discuss a very important news article of finance that is regarding the Monetary Policy Committee meeting that has recently concluded on 8th Feb 2023. And the monetary policy statement has also been released. And in this statement, we can understand that what are the important decisions that has been made by the Monetary Policy Committee meeting and what is the assessment of the global economy and the assessment of the domestic economy that has been made by the Monetary Policy Committee meeting. So before starting with the understanding of the Monetary Policy Committee meeting, there is a big announcement from EduTap that we have brought for you the comprehensive guide for RBI, NABARD and SEBI. So through a single guidebook, you can get all your common queries answered. If you want to know about the examination, that what is the pattern for the exam, what are the previous year cutoff for the exam, what is the syllabus for the exam. So through a single guidebook, you can get all your common queries answered. And even if you want to know about the preparation, that what should be the sources for the preparation, what should be the strategy for the preparation. You do not have to visit different links, you do not have to visit different websites. All your common queries can be answered through this single guidebook, and here definitive answers are provided to you, and this is made absolutely free of cost to save your time, to save your efforts, and you can easily download these guidebooks. The link is provided in the description box below, so do download these guidebooks. Okay, so now coming to our topic, that is the bi-monthly Monetary Policy Committee meeting has recently concluded on 8th Feb 2023. Okay, so on the basis of the assessment of the current and the evolving macroeconomic situation. So seeing the current and evolving situation of our economy, the Monetary Policy Committee at its meeting has decided to increase the repo rate, that is a part that is under the liquidity adjustment facility, by 25 basis point, that is by 0.25%. So the repo rate has been increased in this meeting by 0.25%, that is the repo rate was 6.25% before. Now it has been increased by 25 basis point, that is it has been increased to 6.50% with immediate effect. The repo rate has been increased from 6.25% to 6.50%. Okay, and the other major decision that has been taken is the MPC also decided to remain focused on the withdrawal of accommodation to ensure that the inflation remains within the target going forward while supporting growth. So as we have already known, as you know, that since January 2022 to October 2022, the inflation was above the 6% mark. The inflation, the retail inflation was continuously above the 6% mark. Now this 6% is the upper tolerance level. So if the inflation is above our upper tolerance level, so you can understand that that is very harmful for the country, and that is a major concern for the Monetary Policy Committee. So the target is 2%, target is 4% plus minus 2%. So that is the inflation should remain in between the range of 2% to 6%. Now 2% is the lower tolerance level, that is the inflation should not go below the 2%. And the 6% is upper tolerance level, that is the inflation should not go above 6%. So the inflation should be around 4%. But continuously since January 2022 till October 2022, the retail inflation was above 6% mark. Okay, so it has been decided to increase the repo rate, and it has been decided to withdraw the withdrawal of accommodation. So now, if you want to know about the Monetary Policy Committee, that what is the constitution of this Monetary Policy Committee and what are the members, who are the members of this Monetary Policy Committee and how the members are selected and everything, all of this is provided in this video. I will provide you the link of this video. I will pin it in the comment section below. Okay, you can go and see that what is the Monetary Policy Committee. But the head of the Monetary Policy Committee meeting is the governor of RBI, that is currently it is Shaktikanta Das. Okay, so I hope you have understood that the RBI in its February, the Monetary Policy Committee meeting in its February meeting has decided that the repo rate will be increased as well as the withdrawal of accommodation will be done. Okay, so that the inflation can remain within the target of 2% to 6%, that is around 4% plus minus 2%. Now coming to the policy rates. So we know that the repo rate has been increased. Increasing repo rate means what? So repo rate is the percentage rate at which the banks take loans from the RBI. So the RBI is giving the loans to the bank at this percentage, at the repo rate percentage. So now this percentage has been increased. That is, the banks are going to get the loan from the RBI at a higher rate. So the banks will want to give the loans to the consumers at a higher rate. That is, the interest rate will also be increased. When the interest rate is increased, that is, the consumers. Now I want to take home loan, I want to take car loan. So if the interest rate is increasing, I will think that this is very expensive for me. Okay, the interest rates are increasing, this is very expensive. So I will take the loans later, I will buy the homes, I will buy the cars later. So the consumers will decrease the demand when the interest rate is going high. So you can understand, in this way, when the demand is going low, the prices will also decrease. When the demand is decreasing, the prices will also decrease and the inflation will be controlled. And that's why the repo rate is increased by the RBI to control the inflation. Okay. So as the repo rate has been increased by 0.25%, okay, from 6.25% to 6.50%. So the repo rate is greater than the SDF by 0.25%, and the MSF, that is the marginal standing facility, is greater than the repo rate by 0.25%. So if the repo rate is 6.50%, the SDF, that is standing deposit facility, is 6.25%, and the MSF, that is marginal standing facility, is 6.75%. That is, the policy repo rate has been increased by 0.25%. So the SDF has also increased from 6% to 6.25%, and the MSF has also increased from 6.50% to 6.75%, because the repo rate, the SDF is below repo rate by 0.25%, and the MSF is above repo rate by 0.25%. Okay. Now the bank rate is same as the marginal standing facility rate. It is equal to that rate. So it is also 6.75%, and there is no change in the fixed reverse repo rate, that is 3.35%. So this was the previous rates that was decided in December 2022 meeting, and this is the new rates that has been decided in February 2023 meeting. Okay. So you can see this graph also, that since May 2022, in which the unscheduled meeting of the Reserve Bank of the Monetary Policy Committee meeting was held, since then the repo rate has been continuously increasing, and in December 2022 the repo rate increased to 6.25%. In December 2022 the repo rate increased to 6.25%, and now it has been increased to 6.50%. The inflation was continuously higher since January 2022. So the inflation was continuously above the upper tolerance level, that is above the 6% mark, since January 2022 till October 2022. So the inflation was above the upper tolerance level since January 2022 till October 2022. In November 2022, the inflation came down to 5.88%, that is below the upper tolerance level, that is below the 6% mark. So after 10 months, the inflation came down from the upper tolerance level, that is, it came down from the 6% mark to 5.88% in November 2022. So now we have understood that the repo rate has been increased, and why it has been increased: to decrease the demand, to decrease the prices, to decrease the inflation. There is the withdrawal of accommodation that is being done. Now let's see the domestic economy, the assessment of the domestic economy that has been made by the Monetary Policy Committee meeting. So the CPI, that is the Consumer Price Index, headline inflation moderated to 5.72%. So the inflation, the retail inflation came down to 5.72% in December 2022, and the CPI, that is the Consumer Price Index or the retail inflation, came down to 5.88%. It was 5.88% in November 2022. So we can see that in November and December, the Consumer Price Index, the retail inflation was below the 6% upper tolerance level. It was below the upper tolerance level. Okay. So the Consumer Price Index was decreasing. Why? Because of the double-digit deflation in vegetable prices. So how it came down from the upper tolerance level? How the retail inflation came down from the upper tolerance level? It was because of the double-digit decrease in prices in the vegetable prices. See, winter season was going on, and in that season there are the decrease in the prices of vegetable, and that's why there was the decrease in inflation due to the double-digit deflation in vegetable prices. Because if you see the other prices, they were still growing. Let's see that. So the inflationary pressures accentuated across cereals. The cereals prices were increasing, the protein-based food items and the spices. The fuel inflation was edged up primarily from an uptick in kerosene prices. So all of their prices were increasing. It was majorly the vegetable prices whose prices was decreasing, and due to that there was a great impact on the inflation in the retail inflation, and the retail inflation came down from the upper tolerance level to 5.88% in November 2022 and 5.72% in December 2022. The core CPI, that is, if we exclude from the consumer price index, if we exclude the food and fuel, we get to the core CPI. So the inflation rose, the core CPI inflation rose to 6.1% in December due to the sustained price pressures in the health, education, personal care sectors. Okay. So now the overall liquidity remains in surplus. So in our country, there is the surplus of the liquidity, there is surplus of the money supply that is present in our country. But the RBI is continuously, it is daily trying to absorb the extra liquidity. So with average daily absorption under the liquidity adjustment facility increasing to 1.6 lakh crore during December-January from an average of 1.4 lakh crore in October-November. So this is the daily absorption, average daily absorption under the LAF that was happening in December-January. Okay. So on a year-on-year basis, the money supply expanded, the money supply, that is M3 that we usually calculate in India, this expanded by 9.8%. So you can understand that still, even though the RBI is trying to absorb the liquidity, still the money supply was expanding, okay, and by 9.8% as on January 27, 2023, while non-food bank credit rose by 16.7%. Now the money supply was expanding because of the credit growth that was very high. I have told you in the financial stability report, in the report on trend and progress in banking, that there was the very high credit growth that was happening. There is the high credit creation that is happening, and due to this, the money supply is expanding in the economy. Okay, even though the RBI is trying to absorb the extra liquidity. India's foreign exchange reserves were placed at US dollar 576.8 billion as on January 27, 2023. So it came down, the reserves came down from the US dollar 600 billion, but it is still good that we are maintaining this much of the reserves with us. Okay, so the RBI has used a lot of its reserves to manage the Indian rupee so that it do not depreciate much. Okay, because the US dollar was appreciating a lot. So to manage that, we have used, the RBI has used the reserves to manage the Indian rupee so that it does not depreciate much, and that's why our reserves have decreased, but still we are managing a good reserve system. Now the first advance estimates released by the National Statistical Office in January 2023, it has told that the estimate is that the real GDP growth for the 2022-23, that is the financial year ending 23, will be 7%. So this is the advanced estimate that has been provided by the National Statistical Office. Okay, so remember this is for the financial year 23. And this is majorly, the growth is majorly because of the private consumption that is happening, the good demand that we are holding, the resilient demand that we are holding, and the investment, the credit growth is why the credit is increasing in the economy, because credit, the loans are being taken for the investments. Okay, so the investment is increasing in our country. On the supply side, the gross value added was estimated at 6.7%. So now Rabi acreage, so the Rabi growth, the Rabi crop that happens in the winter season. So the Rabi acreage product exceeded last year's area by 3.3% as on February 2023. So this data point I have brought for you, this whole, because it is continuously in news, and in PIB also this was mentioned in January 2023, this was mentioned that there is the industrial production that has expanded by 7.1% in November after contracting by 4.2% in October. So this data point is continuously in news, okay. As well as in the PIB, it was mentioned that the industrial production has expanded by 7.1%, and this is a 5-month high. So you have to remember this data points, okay. After contracting by 4.2% in October. Capacity utilization, that is the resource utilization that is happening in the manufacturing, is now above its long period average. So that is also good. So now the domestic demand has been sustained by strong discretionary spending that is happening. So the domestic demand has been sustained. The domestic demand is resilient. It is going good due to the strong discretionary spending. The urban demand has exhibited resilience. Okay, it is growing good as reflected in the healthy passenger vehicle sales. So the vehicle sales is increasing, as well as the domestic air passenger traffic, that is the airline booking, we can say, that is also increasing. The passenger traffic is increasing. So there is the good urban demand, resilient urban demand. Rural demand is improving, that is due to the agriculture and allied activities. We can see that the area crop is increasing, the crop area is increasing. That means the agriculture activities are increasing, the allied activities are also increasing, and due to that the rural demand is improving. Investment activities gradually gaining ground. Okay, so the investment activities are also resilient. Non-oil and non-gold imports expanded in December. So in December there are the increase in the imports that has happened because we have good domestic demand. Now the exports, the merchandise exports, that is the goods being exported, so that has reduced, that has contracted in December on weak global demand, because the global demand is very weak, and due to that there is the exports that has decreased, but the domestic demand, our country's demand, is good, and that's why the imports has increased. So now inflation. Here are the projections that has been made by the Monetary Policy Committee meeting that we have to remember, okay. So the inflation is projected at 6.5% in the financial year ending 23, with Q4, that is January to March 2023, at 5.7%. So for this quarter we are expecting the inflation to be around 5.7%. On the assumption of normal monsoon, the CPI inflation is projected at 5.3%, very important. This percentage is expected for the financial year ending on 2024, that is for the financial year 2023-24. The CPI inflation is assumed at 5.3% or projected at 5.3%. Real GDP growth for financial year ending 24, that is for financial year 2023-24, is projected at 6.4%. Okay, and for the starting 2 quarters the growth will be even higher, that is around 7% mark, but the other 2 quarters the growth will be lower. Okay, so this is for the 2023-24. For the 2022-23, the National Statistical Office has already released the first advanced estimate. So remember that percentage, okay, that the NSO has released, has shown. So now the easing of inflation. In December the inflation reduced to 5.72%. In November the inflation decreased from the upper tolerance level to 5.88%, and this is due to the strong deflation in vegetables, strong decrease in the vegetable prices, double-digit decrease in the vegetable prices, which may dissipate when the summer season uptick. So now the decrease in the vegetable prices is expected to end in the summer season. Headline inflation excluding vegetables has been rising well above the upper tolerance level. We can say the core inflation is also very high, it is above the upper tolerance level, and so if the vegetable prices, the decline that was happening, that stopped, that means now the decline of the vegetable prices or the decline in the vegetable prices was leading to the retail inflation to go below the upper tolerance level. Now if the vegetable prices start increasing, if the core inflation also start increasing, you can understand that the retail inflation will be quite high. So inflation therefore remains a major risk to the growth outlook, to the economic outlook of our country. Now, domestic economic activity is expected to remain resilient. The demand is expected to remain resilient, and this is aided by the sustained focus on the capital and infrastructure spending. The investments in India in the union budget also, this has been focused on in the union budget of 2023-24. So, on balance, the MPC is of the view that further calibrated monetary policy action we have to take, further strong monetary policy action we have to take, that is warranted to keep the inflation expectations anchored. So, if we are expecting that the inflation is going to go high, so we will start buying stuff now, that okay, let's buy the car right now, because in the future the inflation is going to go high, in the future the car prices are going to go high. Now, all the people are thinking like this, the demand for the cars will increase, the price for the car will start increasing. So, you can understand that this is how the expectations affect the demand in the current period, affect the price in the current period, and the RBI wants to keep the inflation expectations anchored and to break the core inflation persistence that is happening. The core inflation is continuously rising, so we have to stop that also, thereby strengthen the medium term growth prospects, and we have to stop the people to think that okay, in the future also we are going to go in trouble, the inflation is going to go too high. So, to stop that kind of inflation expectations, the inflation expectations need to be anchored, okay, to be lowered. So, for that the MPC has decided to increase the policy repo rate by 25 basis point to increase the repo rate to 6.50%. So, you can understand that since May 2022, RBI is continuously increasing the repo rate to make the inflation expectations anchored, to reduce this inflation in our country, okay. And still the RBI has in this February 2023 Monetary Policy Committee meeting also, the RBI has increased the repo rate, by 25 basis point to 6.50%, okay. So, now coming to the global economy, the outlook on global growth has improved in recent months, okay, even though the geopolitical hostilities so, even though the persistence of geopolitical hostilities is happening, okay, even though the geopolitical tensions are there, the impact of monetary policy tightening by central banks across the world has also led to a bad effect, okay, because what is happening, that due to the tightening of monetary policy, that is, let's say the repo rate is increasing, due to which what happens, the demand decreases. And similarly, in the global economy, what is happening, that all the advanced economies, all the other economies, they are also increasing their rates, so that they are tightening the monetary policy, due to which the demand in their economies are decreasing, okay. So, the outlook on global growth has improved in the recent months despite the persistence of the global tensions, of the geopolitical tensions, and the impact of the monetary policy tightening. So, the inflation is exhibiting some softening from elevated levels. The inflation has shown a down path, but it is still at a high level. So, from the elevated levels, the inflation has gone down a little, but still the inflation is quite high, prompting central banks, as the inflation has gone down, has softened. So, this has prompted the central banks to moderate the size and pace of the rate actions. So, as the RBI was also increasing the repo rate by 50 basis point, then it came down to 35 basis point, that the RBI was increasing the repo rate by 50 basis point, 40 basis point, 35 basis point. Now, the RBI has increased repo rate by only 25 basis points. So, you can understand that as inflation is softening, the monetary committees or the monetary policy tightening is happening, but at a slow and at a lower pace, the rate actions are being taken. However, the central banks are reiterating, they are telling their commitment to bring down the inflation close to their targets. I have told you that the inflation has reduced, but it is still at a very elevated level, and we have to bring it to the target. All the economies are focusing on bringing the inflation to their target, around their target. So, we have the target of 4%. The Reserve Bank of India wants that till the financial year 24, we should bring our inflation around 4%. Similarly, the other markets, other economies also has the target to bring their inflation to around their target percentage, okay. The US dollar has come off its recent peak. Okay, the US dollar has at last, after accelerating to a peak, the US dollar has came down. Equity markets are going good now. However, the weak external demand, see, due to the reduction in demand, as the monetary policies are tightening across the economies, there is the reduction in demand that is happening in the global economy. So there is a weak external demand in major advanced economies. The rising incidence of protectionist policies, now they are taking, the advanced economies are taking the protectionist policies, that is to promote their producers. Okay, that is happening. Volatile capital flows, that is the money is going to the countries, advanced economies, where the interest is quite high, because they are also increasing, they are also tightening their monetary policy, they are also increasing their rates. So the volatility in capital flows is happening. The money is going out of the emerging markets. That distress is also a problem in the emerging market economies. This all could weigh adversely on the prospects for the emerging market economies. The protectionist policies that is taken by the advanced economies, the capital flows, the volatile capital flows, the weak external demand from the major advanced economies, and the debt distress, all of this is very bad for the emerging market economies. Okay, so now these were the members of the Monetary Policy Committee meeting, and 4 out of 6 members has taken the stance to increase the repo rate by 25 basis point and to do the withdrawal of the accommodation, while the 2 were the opposing votes. So these were the members that voted to increase the policy repo rate by 25 basis point, while the other 2 were against the repo rate hike. Okay, and these were the 4 that voted for to remain focused on the withdrawal of accommodation, while the other 2 were against this. Okay, while the other 2 voted against this part of the resolution. Now the next meeting of the MPC is scheduled during April, because it is a bi-monthly monetary policy committee meeting. So the committee meeting has happened in Feb 2023. So the next meeting will be held on April 2023, and the dates are 3, 5 and 6. Okay, so I hope you have understood the news article very clearly, the monetary policy statement very clearly. This is the first question that I hope you can easily answer. And this is the second question, and try to answer this question also. So do subscribe to our YouTube channel and join our Telegram channel. Here you will get the PDF. If you have any query, you can mail us here, or you can contact us through this number. Thank you very much, everyone.